Well, hi traders, Chris from the research team here at Pepperstone. Now, a short period ago, we did see the Australian August CPI numbers coming through. This is the second monthly instalment that we've been seeing ahead of the Q3 CPI print, which comes out on the 29th of October. Now, of course, the RBA do put less weight on the monthly prints. They've told us that time and time again, and are careful the market sensitivity around this is a little bit reduced. That said, I think it is a pretty good guide, because if we look at the two monthly partials now, they come to about 85% of that quarterly basket. And what we've seen today is that dwelling costs have gone up. We've seen services and household services prices rise. And ultimately, we've seen the headline CPI print for August going from 2.8 to 3%, right up into that target, upper echelons of the target band. The trim mean number has come down from 2.7 to 2.6%, but the partials that still need to feed into the Q3 CPI print do suggest that they've got some upside risks. And the current tracking rate then, if we look at this for where we're modelling the Q3 CPI print that comes out, as I say, on the 29th of October, is for headline to come around sort of 1% quarter on quarter. And the trim mean print, which of course is what the RBA set policy to more closely, is expected to be up sort of tracking around 0.8, 0.9% quarter on quarter, which is right up into the topper echelons of where the staff forecasts are for the quarter and going into the end of the year. So of course, this does really sort of limit the RBA in that situation when we've got a reasonably tight labour market still, and we've got growth running at 1.8%, which is kind of going into their potential rate, where anything higher than that then will lead into higher price pressures coming through. Now, it's no surprise then what we've seen today on today's numbers, even though we have seen less sensitivity to these, is some conjecture about whether the RBA will cut rates again. If we have a look at the front end of the Australian government bond curve, we've seen 3-year yields spike up 6 basis points, which is a reasonable move. But you go into the rates market, the interest rate swaps market, we can see that the next meeting coming through at the end of this month is there's absolutely nothing being priced. No one's expecting a rate cut. It's given very, very little prospect at all. For the November meeting that comes through on the 4th of November, the market is now taking the probability in that price setting from around 75%, 3 and 4 chance, down to about a 54% chance. So very much a line ball call coming through. Of course, the RBA will continue to look at the jobs market. We get one more jobs print between that September and that November meeting. There is no October RBA meeting to come through. But so that's very much a line ball call. And if you compare that to what we've got in New Zealand, where the next central bank meeting comes on the 8th of October, and that's pricing about a 25% chance of a 50 basis point cut, it's no surprise then that the Aussie has rallied up into 113 against the Kiwi. Yeah, it's been super strong, breaking out, really strong momentum. I expect that to continue pushing up to about 115 over time. And we've seen the Australian dollar working quite nicely against the pound, where we expect it to revisit those recent lows, maybe against the CAD and also against some of the cross rates as well. So Aussie looking really strong based on these relative rate settings. Will we get that cut in November? That Q3 CPI print is going to really decide that fact. Trade at Pepperstone.